Welcome to my second discussion on the statement of cash flows. I have some goals in this pencast. My goal in this pencast is to develop the theory of preparing that cash flow statement from the expanded balance sheet equation. To review our balance sheet equation, we have cash plus current assets plus all other assets equaling total assets. There's our total assets. Current liabilities and long-term debt equaling our liabilities, and then we broke our stockholders' equity into common stock, retained earnings, net income, dividends, and treasury stock. So I've taken my basic balance sheet equation and I've expanded it, and then as you'll recall, I subtracted current assets and my other assets from each side. And what I ended up with is cash by itself. So I now have cash. If you're going to do it to one side, you have to do it to the other, right? So what I end up with is cash equaling, the change in cash will equal the change in current liabilities plus the change in long-term debt plus just bringing it down, common stock plus retained earnings. You know, there's some abbreviations, plus net income minus dividends minus treasury stock. Got our current assets and our other assets on this side. So here is then our balance sheet equation restated to help us do a cash flow statement. Let me put together the basic framework of a cash flow statement. You have the name of the business, the fact that it's a cash flow statement, and it's a period statement, covers a period of time, and we have then our major sections. I'll use the author's terminology. We're going to have cash, big H there, cash flows from operating activities. Some will be positive, some will be negative. We'll net them to one number that's cash flow from operating activities. That's where we'll turn net income to a cash basis. It's one big section of our cash flow statement. The next big section will be cash flow from investing activities. And that will be where we have dealings in our other assets. We'll have changes in property, plant, and equipment, and land, and those things. Investing in ourselves. Our third big section will be cash flows from financing activities. We finance ourselves in some ways. T-A-V-I-T-I-E-S. Spelling goes to hell in a handbasket when you're pencasting. We'll net all of these. We'll have some inflows and outflows from our financing activities, and this will give us our change in cash. To that, we'll add our beginning balance of cash, and then the change plus the beginning balance will equal our ending balance. And in this way, our cash flow statement will tie to our two financial statements. Then we'll have some notes that we need to add, but we'll talk about those later. Right now, what I want to do is find a place for all of our changes. Remember, our goal was to look at the change in cash. So if cash started at 500, let's say, and ended at 900, we need to explain how we used and where it came from the 400. So, let's start with cash flow from operating activities. Net income is turned into a cash basis. So the first thing I'm going to do is say I'm going to put net income into cash flow from operating activities, and then I'm going to turn it into a cash basis. And in doing that, I need to look at the change in my current asset accounts, because current asset accounts change when you're recording items of net income. When you record sales, it's accounts receivable and sales. Accounts receivable is a current asset. If you record purchase of inventory into accounts payable, they're both current assets and current liabilities. Nearly every transaction that affects net income affects the current account, so I'm going to look at those there. So I'll look at net income, which is a change number, the change in my current assets, and the change in my current liabilities. And when I do that, that's where those accounts will live when I am making my statement of cash flows from operating activities section. When I've looked at all current assets and current liabilities, then a few other things that we'll talk about later, I should have cash flow from operating activities. Hopefully it's an inflow. Then I'd move on to my cash flow from investing activities. Remember, that would be all my other assets. We abbreviated it OA, and I'll write that out. That's all my other assets. If I buy some, it's an outflow. If I sell some, it's an inflow. But change in other assets is going to get picked up in investing activities. Once I've looked at all my other assets, that section's done. Look how much progress I've made. I'll move on to my financing activities. How did I finance myself? I'll look at my inflows and outflows from long-term debt, any issuances of common stock, or sell or purchases of treasury stock. Are there any other changes in retained earnings? Did I pay dividends? Those are the kinds of accounts I look at under the change in cash flows from financing activities. So I'll come up with a cash flow from operations after netting all the current assets, liabilities, and net income. Hopefully it's positive. I'll come up with the net cash flow from investing. Might be positive, might be negative. I'll come up with a net cash flow from financing activities. And when I add up all of those changes, it should equal the change in cash. And to that, I can add my beginning balance, and it will give me my ending balance. Put a few dollar signs on it, double underlines, and you're good to go. That then, my friends, is how you can use the expanded balance sheet equation to prepare a statement of cash flows. And as long as you don't leave off one account, you will absolutely come up with the change in cash. Isn't that interesting? Let's get going.